The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we having some wild action in the markets today. Looking at the German DAX, you can see we made some type of a butterfly pattern down there. A couple hundred points lower. We're continuing to rally. I tell you, folks, I've been schooled here the last 24 hours. A little bird over in the old UK showed me what was going to happen and why. And I didn't believe him, but by golly, he proved me right. Just want to let you know, folks, do you remember the Federal Reserve dropped their rates about a week ago, right on the top of the market? And what did it do? It went down. You don't have to be a rocket scientist to figure this out. Just look at the news. You can see everything that you're seeing on the financial challenge is based on the yield spread of the the notes and the notes and the bonds, and that's the whole key to this. That's what turned the whole market. Let me just give you an indication what happened last night. This is the I'm using a 4-minute chart just to describe it pretty easily, but if you'll take a look at this, this is what was going on. We had the Treasury bond spike up to 166.13. That was about, I think around midnight, as I recall. No. It was around 7 a.m. New York time. That was about 2 hours ago. But the one thing that we have to remember now, if we get below this 164.12 level, this is a major top here in the bonds, is what it looks like. The reason why it's important is the open interest in the both notes and the Treasury bonds dropped yesterday during that big up move, with bonds being up more than the limit, or up to 2.5 points. And open interest dropped. That's short covering. Same thing happened in the notes. And the notes are even more bearish than the bonds because the notes were only able to take out the highs of last week by 2 ticks and then reverse. Now, maybe this stuff turns and goes back up again, but that's what rallied the stock market, folks. It was that simple. I mean, they don't need a lot of money to do that. They just have to do that spread, and that gets the rest of the market going. The big one that I was watching last night from my friends in Hong Kong, because of the problems they're having over there, we watch it, very closely. And if you'll remember, we were looking at this pattern here in the Hang Seng this week, where we were going to get down to this 253 level, 25,300. And the market was actually bouncing around up and down. It was down 100, up 100, and doing, looks like it was making some type of a bottom. And then lo and behold, you wouldn't believe the activity that we had here in the Hang Seng last night. This thing broke down all the way down to 25,000, folks. It rallied 500 points so fast you couldn't even get an order in. I mean, it was I couldn't believe it when I was seeing it. This stuff you're seeing in the news is just so much. Oh, let's move on. I don't want to get too much into the news because it's all related to this spread that they're talking about all the time. Is this yield spread? But we'll see. Let's take a quick look at the gold market here. Let's get up here. We'll put this. This is the action that we were looking at in the gold. Hold on one second. Get this up here so we can see it. This is a shorter term chart, 15 minutes. As you probably might guess, I'm a tad tired because I was watching all this last night and with a great deal of anticipation. You'll see the ABCD that we have there in the gold. You'll notice here we hit that 15,349. We backed off $15 from that 3 times last night, folks. We've had a $100 swing in gold last night. If you were watching the 15-minute charts, up and down, up and down, up and down, I think we had 4 of them. And so that's a big, big number up there to take a lesson on. Now, folks, I'm a technician, folks. This is I really don't understand the fundamentals. Shane I was tweeting with him this morning, not tweeting, but I don't tweet, but I was Skyping with him, and he was describing pretty much what I was looking at, that they were looking at this spread as to turn the market, and that's exactly what was happening. I mean, it was just really, they didn't need a lot of money to do it. They only got to do one side. You just push the bonds down, and remember, the bonds are 1/5 of the volume and open interest in the notes. So they don't even have to mess with the notes. They just have to do the bonds to control that rate. And the rate's what they put in the news, and that's what was moving the whole thing, because everybody said, "Oh, this is a recession." Folks, if you look at the data on that, yeah, there might be a recession, but the band on that is 2 to 3 years. That's a lot of moving averages. So that's what I'm looking at this morning, whether that means a whole lot or not. But that's what I'm seeing. Now, something really big happened yesterday on a global basis that, you don't see things like this very often. I think it's worthy of us taking a note. I don't trade this at all. But if you want to see a country that's really in big trouble, if you like socialism, here's what you got to look forward to. Here's the U.S. dollar versus the Argentinian peso. Look at it since August, folks. It's lost half its value, 30 to 60. You can see what it's done, 40 to 60. It lost 25% here in just a matter of hours between the in this last few days here. So this is a really that country's getting ready to move. Yes, we do live in interesting times, Marshall. That is a Chinese curse, by the way, but that's neither here nor there. So anyway, if we see the bonds go below 164 today, that would be an indication that we've had a pretty significant top formed, and but the emotionalism of this is very important, folks, because these markets in notes and bonds based on contracts, for every buyer there's got to be a seller, and if prices are going up and open interest is dropping, buyers are leaving the market. That's all short covering, and you can see it straight up like that. That's usually how it happens. So watch it. It's very important. We've seen this in gold. We've seen it in a lot of different things. So it's worthy of our attention, because this is the number one commodity market. The notes are the number one. The 2-year, 4-year, and 10-year. 2-year, 5-year, and 10-year are the ones that are the really big ones. So this could be a big turn in the market. I don't know. They certainly saw panic coming, and I have to assume that you don't get the little guy up there wanting to sell bonds at 166, folks. That's the big boys, and the Federal Reserve does a lot of trading. Every office of the Federal Reserve, all 12 of the different banks, has a whole huge set of traders in there doing that kind of stuff. So that's pretty much what's going on. Anyway, well, all this could change in a heartbeat too. Heck, you don't know. Longer term, I don't think it makes a whole lot of difference, but shorter term, maybe so. But the action that we've seen in the Hang Seng last night, just absolutely, that would be the equivalent of the Dow being down 2,000 points and turning around. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, sorry, boys and girls. I had a call coming in, and I answered it, and that puts me on Skype. Sorry about that, folks. It's a technical problem, and hitting on about 1 1/3 cylinders today, boys and girls. This is really important, folks. You're going to have to humor me a bit here because I think this is important given what we're seeing in the action and everything. This is going to be quick. There's the bond monthly histogram showing that August top, then lower, if that's the case. Let's take a look at the next one. This is just all cycle stuff, folks. Nothing more. I'm just reminding you. That's all. You'll notice here, this is the German Bund. Same thing. And the last one we're going to look at, of course, is the Japanese stock market. All right. Now, remember, I'm a technician. I don't know diddly squat about the fundamentals or stuff. But when you got open interest dropping and prices going higher, that's negative. That's just common sense. You can't, that's mother God and country stuff. You can't mess with that. Okay, let's take a look. The rest of the world is, the world is not coming to an end, folks. This is not, when you see this stuff happening like this, I mean, this is emotionalism at its finest. It really is. Now, if this were happening here, let's just get the euro up here. Hold on one second. There we go. We'll get the euro up here. Here's where we are in the euro. We went down. We almost made that 61% retracement last night. We missed it by about 15 pips. But if this was going crazy, in other words, if the U.S. dollar was going wacko, and it's not, then there would be problems. You see, if we start seeing stuff in the U.S. dollar that that's going on in the Argentinian peso, then there's big problems. But that's not. That's not right. David White just posted a nice quote from Uh, Samuel Clemens, also known as Mark Twain, whenever you find yourself on the side of the majority, it's time to pause and reflect. So maybe take a look at these bonds and maybe they are oversold or overbought. We'll see. Okay, let's move on to a couple of things that in real life that I think are important. One of them is this one right here, folks. Let's get this up here. Take a quick look at it. And this will affect many of the markets too. I'll cover copper in just a second, Mr. Z, if you'll just bear with me here for a second. Uh, you'll notice here that we've had this really negative chart pattern in the corn. And remember, in May we had this tremendously bullish. It rallied $5,000. They were not unable to plant corn. There was going to not be any corn. But then something happened on July the 15th, when the market made a high up there. Things changed. And when did they tell you about it? 2 weeks later. So we'll see. Open interest in bonds decreased yesterday. It did also in the notes and in the 2, 5, and 10 year. The 2 increased, the 5 and the 10 year decreased. So you're talking 12 million contracts, and 8 of those 12 were down. So that's negative. When you add the bonds to it, that's negative. So we'll see. The open interest today, when they put to open interest today, will include what happened last night. And then you'll be able to see whether that was really continuing on. If you see it 2 days in a row of the open interest dropping, that's what it was short covering. The action is telling you that was, because we've dropped almost 2 handles already in the Treasury bonds this morning. So that's it. One of the things that I worked with John during the past couple of months was the thrust, because I missed that move in gold, folks. That's bothered me more than anything that's happened to me all this year, to be that bullish on gold like I was, and to make, we made really good money. Well, I thought it was good money. We made $7,500, and then all of a sudden I tried to get cute and, buy a retracement, but the retracement didn't go down to my price, and I missed it. And I'm trying to, I figured out, John helped me figure it out, how to actually do this. And that's what I've been working on. But we'll see. Okay, let's move on to a couple other things that we want to cover this morning. The cocoa market has been under a great deal of pressure. It's broken down. I just wanted, because we've had a request from someone to take a quick look at it, and I want to, because it's had a really bad break here. Let me get this up here to see here. I'm pretty sure I haven't updated the chart yet, but we'll get it up here so you can take a quick look at it. We got down to that little below the 2200 level, folks. So if it doesn't hold here, and it doesn't appear that it has, they're going to have a little bit more, to the downside. So we'll see what's going on here. Hopefully we'll be able to. I think Shane's going to call in, and at the half-hour break, he'll call in and talk to us about what he's seeing, because he saw this coming too, and. The trouble is, it's 2 or 3 o'clock in the morning. How do you let people know that it's happening? Hey, Shane, are you there?
Larry, can you hear me?
Yes, sir. I certainly can. How are you this morning, or whatever morning is anymore, right?
Exactly. I'm doing
Tell us
well.
Tell us what you're seeing, my friend, because you and I were chatting. And go ahead.
Sure. Can you guys see the screen?
Yes, we're in good shape. You betcha.
Can you see the trading signals up there?
Yes, I believe they can. Yes, they see the whole screen.
All right. So I just wanted to give a big picture here, because we have all of these cross currents going on, and so you might, long term I'm bullish on the market, but on the weekly time frame, I actually issued a sell signal on Sunday. And then on the daily time frame today, we actually had a long trade. So there's all of these different things happening, because there's so much action going on in the market, that you really have to look at this time frame by time frame. So what I've done is I've divided this up now into the day trade, the swing trade, and then the week trades. And so I think that's really important right now, because it's such a confusing time and there's so much speculation going on. And the big talk right now is this inverted yield curve. So I am not so worried about that as an actual fundamental issue, but I'm worried about it more as a psychological issue. for the markets. So this right here, this is actually this purple screen right here. This is actually our weekly signals. This is what was posted on Sunday night. And so if you took one contract per symbol, there's 9 symbols in there. This is what it would be. So it's a real-time tracking of it. And then so that's up, like right now that's up 8,900, but the target on that's only about 6,500. And this is our daily bundle, which we also track in real time every night. So, you know, I look at everything as a whole, as a unit, but the main thing to understand is that the daily is different than the weekly, and it's different than the swing, and it's different than the long term. So it's a little bit confusing. So what I'd like to do here is look at, this is a longer term.
Shane, we've got to take a break. Could you stay with us till after the break?
Sure.
Okay, we'll
Absolutely.
be back with the Wolf Traders, Shane Smolian.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're talking with Shane Smolian, Wolf Trader. Shane, you want to continue on, please? Oops, looks like we lost him. Okay, let's move on, and we'll.
Can you hear me?
Yeah. Sorry, go ahead. Continue, my friend. You've got the mic, so we're ready to go. We got a whole segment here to do it. Yeah, go ahead.
I found a photo here from our visit. I don't know if you want to see if you can see that. I was digging through my photos here.
Go ahead.
When I was visiting. Can you see that?
Yeah. Oh my gosh.
That was, I think that was at Thunderbirds or wherever we went to. Anyway, okay, so first of all, I'd like to talk about the outer rim transits. Now, I'm a Uranian astrologer, like your guest Tim Bost. I actually have been trained in Uranian astrology, which is using the 90-degree dial and the midpoints. It's a German um, type of astrology that was advanced into the early 1900s. So one of the things that we look at is we have these trans-Neptunian points. And so I look at these as an effect on the markets. These are aspects, these are planets that at the time were not visible, but were rectified by events going on in World War I and World War II, by rockets landing, bombs landing. So this was actually very scientific and precise the way that the Germans did it, because they were able to figure out, why are these events happening? Why are these rockets landing here and here? And so they were started to track, and they found these orbits. They actually found and rectified orbits. And they have regular orbits just like the planets in our solar system, but they were actually rectified to events. So they actually have very specific meanings, but they move very slow. So everything that's in the outer universe represents our higher level of thinking, higher levels of consciousness, and those types of things are very slow and gentle and takes time to move when we have these higher thoughts. Every planet, trans-Neptunian planet, is a higher expression of the inner planets on the solar system. So for example, like Venus is, a female planet, which is money, art, music. But in the trans-Neptunian, we have Cupido, which is a combination of Jupiter and Venus, which is a higher expression of that. And so all of these planets, like Apollon, is a combination of Gemini and Jupiter, which is kind of like Jupiter, but much bigger and broader and based. And so I look at these as how they track the markets, and the markets do actually track these. And what we're seeing here is we actually hit a low in July on these outer rim transits, and now we're actually starting to head back up. So in terms of a big picture, we actually came into a low already. We've actually seen a low, and we're actually in a climbing period here. Now I know that's confusing because of the concept with the interest rates, but I know your friend David White likes to put a lot of quotes, but I hear him all the time. He has some really good quotes. But I want to put a quote here that I talked about yesterday on Twitter. It says, in The Art of War, it said, it does not take sharp eyes to see the sun and the moon, nor does it take sharp ears to hear the thunderclap. Wisdom is not obvious. You must see the subtle and notice the hidden to be victorious. So the one thing I want to throw out to everybody is that the thunderclap right now is the inversion. It's the yield curve inversion. That's way too obvious to be a problem. And so because it had been a problem in years past, going back to whenever, doesn't mean it's a problem now, because we have such a strong Fed. And because all of these changes happened from 2009 forward, it's almost a detriment to you to look back into the 60s, the 50s, the 20s, the 1800s, because the market is so different now with the active Fed. It's almost a detriment for you to look back and say, well, that's always happened before, it's going to happen now. I don't really think so. But the perceived problem that this creates for the Fed with that inversion is a problem to them in terms of an optics issue. And so what they're trying to do is eliminate a positive feedback loop. So a positive feedback loop is essentially anything that feeds itself. And so the Fed is constantly trying to stop the positive feedback loop of fear. Positive feedback loop doesn't mean good, it doesn't mean bad. It just means that whatever's happening, it will accelerate, and the market tends to do that. So when there's fear, it tends to feed on itself. And so the Fed knows this. And so with the juice, they're actually trying to come in all the time, which I have here on the screen. They're trying to come in and stem these sell-offs. They're trying to come in, and they're actually doing what's called a negative feedback loop. They come in, so it's like a thermostat. Like if the market falls, they come in to stop it from falling, because they know the psychology of the market will be, well, if this thing starts to go down, all of the sell orders trigger, all of the automated tradings go, the mood changes. Everything shifts on this positive feedback loop. It's what people also call herding, like herding of animals. So the Fed is very worried about the positive feedback loop, and so and they can create this to the upside. So if the market starts going up, then everybody starts to feel good, the reports are better, and so everybody calms down. What's happening right now with this yield curve is it's creating a very negative optic for the Fed right now. It's creating a problem. And so while they are working behind the scenes here, as you can see here with this Fed juice, they're working all the time. They would prefer to be behind the scenes. They don't, I think all of this rate cut stuff is really for show. But because we have this problem and people are talking about it and it's starting to feed into that positive feedback loop to the fear, I think they're going to come in intra-meeting and do a cut. I really do. I think that this is a problem that they have to address immediately. So I really think, and this is not unprecedented, they've done this before back in April of 2001, and they can come in at any time midday. You know, Powell had the choice to do a 0.5% cut, and he did 0.25. So I think he's got a buffer in there still of 0.25. And I think he did that on purpose because he left himself a little wiggle room there. So I really think that there's a very strong chance that they're going to come in and cut between meetings. I think it's probably 70 to 80% chance because they want to get rid of, they want to reduce that inversion on the yield curve. And I think even if the market is rising at this point and you have that inversion, now you're putting out something out there that's going to create an element of fear for the Fed. And they don't want that. So, you know, while I don't think it's a problem here with the market, you know, but that yield curve is creating a psychological issue.
Well, I have to agree with that. I could see it last night. Every time it moved, the market would, you know, had dropped 200 or 300 points in some of these rates. So, hey, listen, thanks for joining us today, my friend. I really appreciate your, you know, bringing this to everyone's attention. It really makes a lot of sense, and as you see it unfolding, it's really quite obvious. So we'll have to wait and see how it all folds out. But thank you so much for joining us today, Shane.
Thanks for having me, Larry. No
you
problem.
betcha.
Anytime.
You bet. That's Shane. You bet. That's wolftrader.com, folks, if you want to reach him. So we had a pretty big run here. We went from 28.17 in the S&P all the way up to 28.62, now backing off both in the NASDAQ and in the S&P. We'll see what it unfolds here. And of course, as the stocks drop off, the bonds are actually, you know, upticking. We had a high of 166.12 last night. We dropped 2 handles down to 164.17, and that was with an open interest dropping yesterday. That's negative, folks. So I don't know what's going to happen with it, but we'll see whether that will unfold here very, very closely. Anyway, let's just move on and talk about a couple of things that I think are necessary. I did mention the chart of the cocoa. I wanted to bring this to your attention for several different reasons, and the main reason is risk control. We'll cover the cocoa when we come back from our break. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the Gold Report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, I posted the chart of the cocoa. The reason why it's important is you see that trend line, that really dark black one. That's a valid trend line because it comes off of 61% retracements, and as soon as we broke below that, which was at 2,200 in the cocoa, it immediately started to go down, and that's where the risk control comes in. That's a real important part to look at. Let's take a quick look here at the stock market. Let's just look at the Dow Jones here. One of the reasons, of course, let's get this up here today. By the way, if these markets fail from here and rates go back up to where they were, we're going to see 1,000-point, well, way more than 1,000-point move. It'll be 1.618 of 800, so that'll be 1,300 points in the Dow. Here's the Dow Jones Industrial Average. You'll see the 1, 2, 3, 4, 5 expanding triangle, which is also a 3-drive pattern from 1, 3, and 5. That's a reverse point wave. It also is a double top. And what we've done now is you'll notice that 78% level. That's a low we hit yesterday in the Dow Jones Industrial Average, 25,500 and change. We've rallied 100 and some points this morning, basically nothing. Going below that, you see that we're coming down into late September, early October, which has the negative biases on these. So those are just a few of the things that we're keeping a really close eye on this morning. So that's neither here nor there, but that's what we're seeing early this morning. So my program, the AI program, is not functioning right now. We had a problem with the computer. Hopefully, I'll have it done by Monday, get it fixed up. But there's nothing there to show what's happening today. But you don't need it. If you just follow the patterns and the ratios, you'll be pretty much able to see what's going on. But thanks for the asking about it, Marshall. I appreciate that quite a bit. Let's take a quick look here at the corn market, folks. I believe that sometime here, we're going in the next couple of weeks, we're going to be down here. And here again, this is nothing to do with the fundamentals. We've already been through that, folks. You've heard me enough here that you see why I'm a technician. There's so much BS out there that it's just it's really crazy. So keep in mind that that's what you have to do, is you got to see what the charts are doing. And you see this bullishness, and whatever it happens to be, it doesn't make any difference. And then a few weeks later, everything changes. Well, the people that are doing it, I don't know if they're manipulating or not, but they're doing a hell of a job if they're doing it on purpose, because these numbers hit pretty good. But look at the ABCD that we have in corn. We got down to 373. Rallied 4 or 5 cents from there, but it looks like we're going to go down to about 355 in the corn. Now 355 is more than $1.20 a bushel under, and remember, we were not able to have any corn because there was so much water out there. The farmers were in boats, so all that stuff was that you were watching in the news. Same stuff, fake news. Doesn't make any difference whether it's politics or market stuff. Follow what the charts are telling you, folks. It's really quite simple. If prices are going up, there's more buyers. If prices are going down, there's more sellers. That's the whole thing. If you remember the movie City Slickers with Jack Palance and Billy Crystal. Jack Palance was the ramrod, the foreman, and he raised his finger, and Billy Crystal says, "What?" And he kept saying, "Just one thing, just one thing." And at the end of the movie, he said, "You just have to do one thing really right. The rest of it will fall in place." So if you're going to be a technician, remember that prices are going up. There's more buyers. Prices are going down, there's more sellers. So that's really what you're trying to pay attention to this morning. So we'll see how some of these things end up. Okay, now let's move on to a couple other things. The VIX index, here again, you're not seeing any type of panic in the VIX. We had that pullback here on Monday. We've had a pretty nice run. I don't know where it's trading now. I believe we got up to about, could someone give me an idea how high the VIX got yesterday? Because I didn't bother to update that this morning, but if you could tell me where the VIX got to last night. I just wondered if it got up to that 26 to 27 level in the VIX. That would give us an idea that ABCD pattern would have completed, and then it would be something that would be interesting. So if someone would be kind enough to let me know where that VIX got to yesterday, I just don't have enough time to pull out the program and update the chart right now while we're talking, because there's a couple other things that I think we need to talk about. It got to 24. Okay, so it hasn't even made the ABCD pattern, so it's nothing crazy going on in that as of yet. Let's take a look at, that's one thing, folks, I've been talking about the VIX index for a year here. Ever since it got below 10, I suggested being long that VIX because there's, they're going to have a tremendous volatility, and we've had that. And that's the reason for holding it, because I think we're going to have the VIX above 50, way above 50 before this thing is all over. Let's take a little perusal look here at something that could be in a lot of trouble. That is the old Bitcoin. We'll get up here and take a look at it. You'll see we made that 61% retracement up there at 12,000, folks, and we've dropped $3,000 here in 6 days. So we need to hold this level here pretty much where we are this morning. Otherwise, there'll be some problems with that. So we'll keep an eye on the Bitcoin. Oh, by the way, someone's asked me to repeat the altcoins or the Bitcoins. Let's try it again. The cryptocurrencies that John Jameson was following. Number one, these are not in order of importance. These are just Bitcoin, Litecoin, Ethereum, Ripple, Cardano, which is John's favorite. The symbol on that is ADA, and Stellar. Those were the 6. Stellar, Cardano, Ripple, Ethereum, Litecoin, and Bitcoin. Those are the ones that seem to be the most thing. By the way, all markets are closed tomorrow. All banks are closed. Everything is closed tomorrow. Anybody that has to ask what that date is doesn't know Elvis Presley, because that's the anniversary of Elvis passing away in 1975. Okay, let's move on here to some other things. Let's see what we've happened here. Things held. Oh, folks. Oh, God, you have to love this. My goodness, oh, my goodness. This volatility is just making me so happy. Now we're getting the euro down here. This is an important one, folks. Pay attention to the euro right now. This is, we got the old lights are flashing and everything's moving. We're just down about another 30 pips. We're sitting right at the proverbial moment of truth in the euro. Let's just get this up here, and we'll be able to see it real quick. I'm just going to bring it up so that I'm not going to put any things. Elvis has left the building. Yeah. Okay, you'll notice that we're sitting right at the 61% retracement now, 111.15. So that should be pretty strong support. Whether it is or not, I don't know, but pay attention to it. It's interesting because it's at that point, and it could be very, very important to pay attention to. So let's keep that in mind, and then we will move on to the next one. But we're going to have some increased volatility in all of these markets. Let's do one other thing before we get off the beaten path here, and just take a quick look here at the transportation index, because yesterday, folks, this is not up to date, but the transportation index this week has gotten really hammered really badly. And I think as I recall, I don't think we're too far away from that lower. We'll try to do that at the break. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found the computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, we're back, folks, and I wanted to post the chart of the Dow Jones Transportations. As you can see, we went down and we have matched the lows that we made back in May. I believe, eventually we make that ABCD, but that's neither here nor there. So we'll just keep a very close eye on it. Also, watch the euro right now, folks. We're down at that really important level here in the euro that we need to be watching, which is down around this 111.10 area. That's a 61% retracement. The British pound has been acting quite well. We held that low at 20.60. 2030, we rallied 100 points up to a 61% retracement level in the euro. So that's another one that looks real interesting. So keep a close eye on that. It's very, very important from a technical standpoint. Regarding the corn, we haven't got down to our price yet in the corn. We're not going to get there. Well, what do I know? But we could get there today or tomorrow. But if we get that corn down to 355, certainly want to take a look at that. That's A, B, C, D, and forget the fundamentals. We already know that they've lied to us already or given us misinformation, and that's not unusual. That's what the markets do. That's why technical analysis follow the chart. If price is up, prices will go higher, more buyers. That's what we're looking at. Also, today is very, very important for the open interest in the bonds notes. We'll have that information for you tomorrow. Next week, we're going to have Shane Smolian on as our guest, and also Arch Crawford. So that'll be a lot of fun to have them on board. So just remember today to have a wonderful day. Live every day in an attitude of gratitude, and may God bless. And just remember to use stops, because if you don't use stops, you're telling the market that you know more than any. I'm going to put this chart up. The last one is what we've been watching here for 3 days now in the euro. This is a 30-minute chart. There we are. You can see we're right there at the key support right now. So whether that's going to hold or not, I don't know, but that's it. Yes, we have beautiful full moon here out in the desert, just absolutely just like daylight out there. So it's really, really quite cool. So see y'all on a flip-flop.